Good morning, good morning. Happy Tuesday. Today is March 7th and I'm back out here on these trails. As you can see, the sun is not even out yet. It's still pretty overcast as the sun technically didn't come up yet. It is now 6:45 here in Georgia. We don't get any sunlight until about 7 a.m. When the time changed, then we'll start to get a little bit earlier. So that's just the way it is right now. So anyways, today I wanted to talk to you guys about what your tax refunds is going to be looking like. As predicted, is what we all expected tax refunds to be a lot smaller this year than it was last year. Because last year, many of you have dependents, and you were getting the advanced child tax credit, and it was the COVID credit and all the credits that was out there. So you guys were getting huge refunds. It was a big year. This year, however, when you file your taxes, many of you will be very much disappointed because all those credits are no longer there. The child tax credit has returned to the regularly scheduled program. So back to $2,000 versus the $3,000 plus that you guys were getting when you had the different age range that it was given out last year. So don't be disappointed when you come to your taxes and you're like, well, I'm used to getting back X amount of dollars, X amount of thousands of dollars, and this time it's hundreds, or that big check is starting to look like that small check. So I just wanted to kind of mention that so you guys are not too surprised. The other thing is, if you want to get a bigger refund, you got to actually pay taxes. So some of you are not paying any taxes, and I'm mainly talking about my business owners that's out there. You guys are making money throughout the year, but you're not paying any estimated taxes at all, and you're wondering why you're not getting a refund or why you owe taxes. So this year is definitely going to be an awakening for many of you, and I hope it's going to be the wake-up call that many of you need, so that you can start doing the right things in your business. So the other thing is, when it comes to filing your taxes, the IRS just wants you to pay exactly what you need to pay, nothing more, nothing less. So as I mentioned previously, if you are expected to owe at least $1,000 in taxes, you are supposed to pay estimated taxes. So let's say, for instance, when you filed last year, if you got a refund last year, you likely were not expected to owe anything this year, so you wouldn't have to pay estimated taxes. However, you could have gotten a refund last year, but this year you expected to make more money, so you and your professional could have discussed what type of income you're potentially going to make this year and calculate your estimated taxes, so that when you file this year, you would have already paid the taxes for the type of income that you were planning on making. Now, sometimes you might end up making more than you predicted or less than you predicted, and you can adjust your estimated tax payments that you had set up when you set them up previously. So let's say you expected to make $200,000, so your estimated taxes payments was set based on that amount, and then you come to find out, oops, I'm not making that much. So halfway through the year, you're seeing instead of projecting to make $200,000, you're on the trajectory to make $100,000 instead. You can go back in and adjust those estimated tax payments to pay less. And let's just say, worst case, I'm hoping this is not the case, but the projection is $50,000 instead. So you may want to stop the estimated tax payments because halfway through the year, you've paid at the higher rate because you thought you was going to make $200,000. So at this point, you don't need to make any more estimated tax payments because you've paid, well, more than enough. So it's so many different things that you can do when it comes to filing your taxes. Tax planning, because that is a part of tax planning that you guys don't like talk about, you don't want to pay for, but that's part of tax planning, so that you can plan to be successful in your business and plan to do the right thing so that you're not, in the end, you're not owing, you're not paying too much, paying too little, and then you worrying about a refund. So the other thing about the refund is whether you are self-employed or you're an employee somewhere, the goal is never to get a huge refund when you file your taxes, okay? The goal is, because that was back in the day. Back in the day, we all heard, oh, get this huge refund, it's tax time. Back in the day, meaning like when I was a child, when I was, elementary school and middle school, maybe even high school, our parents got out their refunds. I don't know how big or small it was because they never showed me the numbers. But, everybody knew we was going shopping or whatever. That's whack. That's tacky. That's outdated. This day and age, we know better. You do better. You're not trying to pay too much taxes to the IRS just to get a big refund when you file your taxes. That's tacky. And it's like you not managing your money correctly. So you want the IRS to manage it for you. They're going to take your money that you overpaid and they're going to have it in some fancy investments that's giving them a high yield of return. And then they're going to take out your little coins and hand it back to you. And the interest that they have made on your money, you're not getting that. They got that. So wouldn't it make more sense if you pay exactly what you need to pay and the extra money, you keep that for yourself, put it in your own investments, make your coins from that, and you just keep growing your money. You're not giving it to somebody else, Uncle Sam, to make money off of your money. You're making money off of your own money. So again, the goal is not to get a huge refund at tax filing time. The goal is to pay enough taxes so that you don't owe. And even if you might have overpaid by a couple hundred, because the estimation, it's all estimations. You don't know exactly the dollar amount that you're going to make a year from now. It's estimation. So you may end up paying slightly over. So you might end up getting back $800, $100, $50. You might end up getting back something like that. That's reasonable. That means you've paid the appropriate amount of taxes. So on the flip side of that, you can be owing $50, $100. That means you've paid the appropriate taxes. And now you just go ahead and hand them the little $100 and you ain't gonna sweat about that because you have the money sitting aside in your little investments growing interest. So you just pull out the little $100, you hand it back to Uncle Sam, and you keep making your money the way you've been doing all year. Rinse and repeat for the following year. And that's how you pay exactly what you need and use the rest of your money to continue to grow your business and continue to build that generational wealth that we're all talking about, and leaving that legacy that we're all talking about. That's how you do it. Not trying to get that big check or that little check so that you can blow the money. For some of you, some of you you're doing the right things with it. You're going to get the money back. You're going to put some in savings. You're going to do some investments with them. You're going to do the right things. You're going to help grow your business with it. And the rest of you that's still out there buying, I'm not even going to list the things that you could potentially be buying. And I know you're going to be buying because you know what you're buying that you shouldn't be. You're blowing the money over stupid stuff. Now, if you got that big check back and you're not ready to invest in all these fancy things that I'm talking about because you're not ready, and it's okay if you're not ready, well, get that money back and just recycle it for the next year. So there's an option on your return that asks you, would you like to apply any of your refund to next year's estimated tax payments? Nobody wants to check that box. Make that make sense. If you know you have to pay taxes next year, why not keep recycling the money as long as you can possibly recycle it? Check the box. Forget the refund. Check the box. Let them apply that money to your next year's taxes. You paid up your taxes for the next year. The extra money, the monies now that you're getting in throughout the year for taxes, instead of putting the money aside for taxes, you can do what you want with it. you can do what you want with it. So that's just little tips that I wanted to share with you that you guys may or may not be thinking about, or your people not telling you about. But Shane the negotiator, I tells it all. And I'm going to tell you these little tips, because if I'm winning, you got to win too. Especially if you over here with me, because I'm not going to be winning by myself and not share the secrets. I have no problem sharing the information with you, because it's not going to hurt me at all. I'm still going to do what I'm going to do. And whether you listen or not, you're going to still do what you want to do. And you either are going to make it to the Joneses or you're not. So I just wanted to come on here real quick to share this information with you guys. And I'm going to pretty much wrap it up at this point and continue my hike, because talking and going up and down these little hills and stuff is making me out of breath. So I just wanted to say the book that I wrote, that I was a part of, doing a collaboration with some other tax colleagues, some awesome other tax colleagues, Tax Strategies for Small Businesses. They have many tips in there that you guys can use. Whether you're working with a professional or not, you can still benefit from the contents inside of this book, because it's a book filled with tax planning. Tax planning. Now, I'm not saying get the book and don't reach out to professionals, because those are entry-level stuff it's telling you to do. If you don't know what you're doing, you're just going to be confused. But at least it's giving you can read the inside details on what all tax planning is all about, things that you can apply immediately to start growing your business, and even some of it for personal. So it'll talk about S corporations. That was my chapter. It talks about retirement. It talks about estimated tax payments. It talks about F bars. That's where if you have a bank accounts in other countries, if you have over $10,000 in any time in the year, I don't care if it's one day you had $10,001, you got to file that on your taxes, because you have to, not on your taxes, but you have to report that you had over $10,000 in that bank account. And some of you are traveling back and forth. You got money in foreign countries and you have over $10,000, but you're not filing that F bar because you may not know about that. So it has stuff about budgeting. So we talk about the profit first method of budgeting, which I use and I talked about in previous videos. It talks about that and so many others. It's a tax Bible. So I'm going to drop the link for you to get that tax Bible. Just don't say Shady never told you. And also for you to schedule some time to sit with me if you need my assistance with filing your taxes or doing your accounting or tax planning, whatever you need. Click the link and schedule some time, or get the book, whatever you need, and be the change that you keep talking about. Be the change. So on IG, the link is in the bio. Everywhere else, the link is wherever you can find it on the thread. So until next time, when I come back with some more awesome tax tips, you guys enjoy your Tuesday and have a great day. Peace.